this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now, go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright folks, today's lesson is going to be fairly simple, and what I want to do today is kind of do what I've done multiple times in the past, is to kind of go through why we took some of the trades that we did. Now, we sent out this week, I don't know how many offhand, 10, 11 trade signals this week. Many of them hit. We've closed out this week with almost 650 pips in profit this week alone, and I believe we are up 1,400 and almost 1,500 pips for the month. I mean, we're kicking unbelievable butt. But the best way to it's great that we send out these signals for our customers, but it's even better when we can show you exactly why we took some of the trades we did. So why don't we get into some of the trades we took this week and how they closed in profit, and let's show you what I saw and why we decided to close when we did. So let's go look at the Aussie dollar US dollar pair first of all. Now, and I don't have the exact dates in front of me, but I do remember that when price was down around this area here, I know that price right now is going to be working its way down to this green line around the 1.1000 mark, and over time, over the next few weeks, we should see that pair come down to that point with which we are going to start taking long positions in this pair. All right, but until then, we are going to be shorting this pair, so we will be entering into another short position. But when price was down around here, price came all the way down. We had once prices moved. Let me explain how price moves. You rarely ever do you see a pair just shoot up, straight up. Okay, you're always it's going to go up. It's going to pull back, go up, pulls back a little bit, up, pulls back a little bit. Now we see price was hesitating here for a while. We traded this range for a while, and now it's working its way back down. Now it's not going to go straight down. It's going to go down. Like, look at the last couple of days, it's going down, down, down. Now I'm going to be expecting a pullback, where we will enter another short position down. So price came all the way down to here, down into the 104.30 something range, and I said, you know what, if price would rubber band back up to 105.50, which is right in here. I don't know why I have so many lines right in here. Let's delete some of these. If price would come up to about 104.50, because we saw price hesitating here, it's got a decent amount of support here, then that would be an excellent opportunity to put to go short. So sure enough, we put a short position here. Price went up the next day, took us into our trade, actually went up a little bit more, and as price came down, we closed out our first profit at let me check here real quick, 104.80. So as price came down 70 pips, okay, down to about here ish, okay, we closed out 70% of our trade in profit. And then what we did is we moved our stop loss to 105.20, 30 pips below where we purchased, below our price, below our original sell price, right? And the reason being, like I always say, and I'm going to keep repeating myself, and folks, if you watch my videos, you're going to see that I'm redundant. And the reason being, Forex trading is not difficult if you know what you're doing. And people try to overcomplicate things all the time, and they keep trying to throw in all these different indicators and magic bullet trading systems. And the reality is, simple support and resistance, lock in your profits early, reduce your risk as fast as possible. So you sold here. When price came down to here, we closed out 70% of our trade. And then usually I like to move my break even at that, the rest of our 30% of our trade to break even. And what will happen then is, worst case scenario, if the trade went against us, the rest of this trade just simply closed out at zero. okay, you still got 70% of your trade in profit. Okay, you still made pips. But what we did this time, because I really felt that price was going to really break down, we moved our stop loss to 105.20. So 30 pips, what we call in the money. Okay, so even if price came back and took us out, we would at least make another 30 pips on top of that. But what we did do is set price to go down to 104.50 as our final profit target, and we closed out our final profit target right in here. Now, hindsight is 20/20. Yes, looking at the chart, I wish we would have stayed in longer because it's going down even further. But I am going to be looking for a nice buy opportunity. Sell opportunity. In fact, I'll spend some time looking today here and send that out in a little bit. But for price to really do another pullback up into this range here, up to 105, okay, or slightly below that. All right, so that is the Aussie dollar, US dollar. Now let's look at the Aussie yen. This is one of my favorite pairs here as well. And now I tell you, I always preach this, but I never sell this pair. I never sell this pair. But I saw that price had moved, and we were looking for a nice pullback, and I took a sell position anyway. And we'll talk about in different video series about interest rate differentials with this pair, the Aussie yen, and why this is banks and other long-term traders use this trade as what's called the carry trade. But what I saw here is price for a few days right in this range here had really been hesitating. Let's see what this price is, around the 88.60 range, all in this range, and price was really struggling to break through for 3 days in a row. You see 1 day, 2 day, 3 day. So on this day, as price right around in this range, when price was at 88.30, we sold this pair, and we put a stop loss, a very tight stop loss, right above these highs that price was having a difficult time breaking through. So we put a stop loss here, okay, which was at 88.83. So we had a 53 pip stop, and we put our first profit target at 87.38. So as price came down to here, okay, you can't get this thing right on the line perfect, around that range, we closed out 70% of our trade in profit, okay, for almost 100 pips, 92 pips. And then as price came down to 86.40, 86.40, oh, basically that green line sitting right there, there it is, we took out the remaining trade for another almost 100 pips right there. So we made almost 200 pips on this trade, 190 pips total. And then we already had last week, the same time we put this sell position, we also put in a buy position that if price would come down here to 86.24, which is right around here, we would go long. Now this trade just took today, and you can see price came down, took in our buy position, our buy limit order at 86.24. Price came all the way down to 85.70, and our stop loss is all the way down in here, so we have a nice stop. And you can see price rejected just like it has in the past, and now I'm expecting this thing to run back up a little way. So we had a short position that we closed out 2 trades, and now as price came down, we took a long position. Now I'm going to explain an effect that you see in the market, and think about trading as a rubber band. Like for instance, as this pair is going up, right, is the sentiment of this pair is long, okay, and it's trending up. Think about price as a rubber band. I want to squeeze this in a little bit more. There we go. Okay. So you can see as price, you can't see that very well. Okay, as the price was moving its way up, it would go up, rubber band back, up, rubber band back, stretch back, up. You see how it keeps going up, back, up, back. You need to understand and get a good solid feel for how the market moves in these rubber bandish type of patterns, okay? So price went up, we were expecting a pullback. In fact, I think we traded a couple trades in here. Price went up, it hesitated for a while. I knew we were going to have a pullback, so we went short. We closed out almost 200 pips. already had a buy position here because long term we're looking for buy positions on this pair, and we bought, and now we're up what, 7 pips, not much. The trade just took a little while ago, and now you can already see price causing a nice strong wick. The bigger this wick is, it means the longer, the more difficult the price was able to push the. Okay, I'm confusing everybody. The longer these wicks, the more bullish this candle is becoming. What that means is the sellers of this pair tried to force the pair down. they weren't strong enough, and now the buyers are pushing the pair back up. Okay, so that was just another trade, and let me show you one more trade here, and then we'll call it a day. The USDCAD pair. Now we've been in this pair long, since January. We bought in here. We were expecting the price to go back up because we were in the channel, and ultimately price is broken into another channel. So we're still in this long position that is making me nauseous. However, this channel down here where price has been coming down to the 98.80 range in here a lot. In fact, over the last few days we've taken multiple trades. Yesterday the pair we closed out a trade 50 pips. The price came down again yesterday. So yesterday and day before, I think we traded this pair twice and closed out in profit. So as you can see here, price trades has been trading in this channel. Now you can see the channels was here, right? We call a channel or a range, okay? And then there's a range here. Now I'm going to back this chart out a little bit here. This pair is easy to see that this thing's been trading in range. And I say this over and over again, folks, that 80% of the time a Forex pair trades in a range, or what you call a channel. You can see way back here last year, all the way through almost the end of January, that see how this channel, it just keeps riding. So what happens when you find a channel? There's opportunities to buy, sell, and then you can break down these channels into more micro channels, because this is daily chart. Every one of these candles is a day. You can break down into the 4-hour charts, 1-hour charts, whatever you want. I highly suggest not trading below 4-hour charts, because the smaller the time frame, the more volatile, and the more you can have difficulty sleeping at night. So the 1-hour charts, the daily charts are the easiest charts to trade off of. But then what happened is the trade ultimately broke into another channel, broke down, okay? And we've been riding in this semi-channel-ish for a little while. You see there's 2 channels actually right in this area. You have this channel here, and then you have this channel here, and you can see how sometimes it swung all the way in between both, all right? And so you've got to look for those things. And so because this has been such a strong support, we're going to continue buying here until price eventually moves back into a new channel. So that's about it for today. So take a look at your charts. If you just look for the solid support and resistance lines, go back and look at our other videos where we talk about support and resistance, and look for a range or a channel that the pair is moving in, and trade those ranges. All right, so that's it for today, and we'll see you at the next video. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.